Huh?
recording பண்ண பாரு. பாருங்க.
से भी भेज सकते हैं, और पोस्ट ऑफिस, थाना, और क्या होता है क्यों, तीन चीज होती है ना बेटा, इसमें सर्च करके भेजूंगा। बैग में, बैग में ना एक पेपर है, उसमें निकालो, तीन चीज भेजी ना। और एक कोई एग्रीमेंट भी होगा बेटा, फिर एक बार थोड़ा सा उसको हेल्प कर देना कि कहाँ पे लिखा हुआ हो सकता है।
Good morning, everyone. We will start our webinar within 5 minutes. Good morning, everyone. A very warm welcome to the 13th Indirect Taxes Colloquium, September 2022, organized by VILGST and Tax Connect. I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is qualified chartered accountant, qualified LLM and LLB. He is the chairperson of the Indirect Tax Core Group of the CII. Also, he is the chairperson of the Fiscal Affairs Committee of BCCI. He is the regular speaker of various professional forums on the key areas of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write in the chat box. We will answer all your queries at the end of the session. Now we request our speaker, Vivek sir, to take the session forward.
Thank you, Titli. Am I audible?
Yes, sir. Yes, sir, you are audible, sir.
Okay. So, good morning, everybody, and thank you for joining today in our 13th Indirect Tax Colloquium. Amidst this busy September season and a furthermore busy October, which is going to come in a very short period of time. So, thank you for joining, and I understand that many of you would be busy in tax audits and various other return compliances, etc. And so we in this colloquium, we have decided to take on a few points which would be relevant for the ensuing tax audits and also some other critical issues like 194 R's impact on GST. 194R TDS is not even 3 months old, and we have already seen a lot of queries, questions, most of which are unresolved even in income tax. In GST, 194R is going to have a very significant impact, and till now 3 months have passed. We do not have any circular at all from CBIC. Then again, e-invoices would be applicable. The transitional credit, last opportunity to avail transitional credit is open from 1st of October, and the time barring period for ITC and others like credit notes in GST, that is still not extended. So all of this over the next 15-20 days, what will keep us occupied and what may create confusions, we will discuss over the next 1.5 hours. Please do keep on typing all your questions in the chat box, and we will answer all of them in the last 15 minutes of this colloquium. This is the benefit of a live session wherein all your doubts and queries can be clarified, and even if it is not clarified, we will get back on your queries certainly after the webinar is over through a one-to-one mail, etc. So friends, with this we take on the first item today in the our brochure. Yeah. So from 1st of October 2022, the transitional credit can be taken through a special dispensation apropos the Honorable Supreme Court's order in the case of Philco Trade Center Private Limited and others, and thereafter which has been sought to be implemented by circular number 180, which will be applicable from 1st of October 2022. Now this circular, just a second here. Yeah. So From 1st of October 2022, I propose this circular 180. Not only the aggrieved taxpayers, but also the non-aggrieved taxpayers who have not even gone for the writ petition in the High Court, even they can avail the transitional credit if any missed out, or they can even revise the transitional credit form in case the original form is previously filed by them. However, friends, as always, this circular, which is a circular from the CBIC, that has angles wherein it tries to protect the revenue, and in that trust, it goes somewhere beyond even the order of the Honorable Apex Court. Now, again, whether this would create further litigation or a second round of litigation in TRAN matters, that is something to be seen. But what we have to understand is that this is the last opportunity, and what are our rights and what are our obligations in the matter of availment of transitional credit. So from 1st of October 2022, there would be a special tool on the GST portal by which this transitional credit can be taken. The question was, what forms can be filed by this special dispensation? So there was a confusion, or there was something in the Apex code where it mentioned only TRAN 1 and TRAN 2 can be filed by this special dispensation. But now it is clear by this circular 180, as we had, if you see our YouTube channel, we had already said that even the TRAN 3, if not filed or if sought to be revised, that can be done by this special dispensation. Many of the taxpayers, especially the electronic companies, they have not filed the TRAN 3. Many of us do not even, as of now, many of us do not even know that where is TRAN 3, whether it existed or did not exist, what was the notification which brought TRAN 3 into effect. We will clarify all of this, but the circular 180 is very, very clear. TRAN 1 and TRAN 2 both can be filed. If TRAN 1 has been filed, TRAN 2 can be filed. If TRAN 1 has not been filed, both can be filed. If both have been filed erroneously, they can be revised. If, well, apropos the various orders of the Honorable High Courts, you have taken the TRAN credit in GSTR 3B, even now, by this special dispensation, you can reverse it in 3B and take it in this special dispensation. So all of this can be done, including revision of TRAN 1, TRAN 2. TRAN 3 can be filed by this special dispensation. TRAN 3, if filed, can be revised while this special dispensation. So this is a very, very unique opportunity, friends. And in one shot, the Honorable Apex Court has tried to resolve all the dispute regarding the transitional credit. So what is this special dispensation? Now, most important is that during this special dispensation is in process, that is from 1st of October 2022 till 30th of November 2022. During the time, this TRAN 1 filing or revisional facility is available to the taxpayers, that is within these 5960 days. In case there is a technical glitch, then the order of the Honorable Apex Court would consider to not have been complied with. And in case of technical glitches, still, if you are aggrieved, you can go to the Honorable Apex Court directly as a contempt of the Apex Court's judgment in the case of Philco Trade Center Private Limited. Once you file this returns, TRAN 1, TRAN 2, TRAN 3, we will come to what is required to be filed. Then the officer gets 90 days to verify your claim along with the various other hard copy of the sales invoice, purchase invoice, delivery challans, etc. And in case the officer is satisfied, then he would pass a speaking order, and post that the ITC regarding the transitional credit would flow through your ITC credit ledger in the GST portal. Now, once you upload this TRAN 1, TRAN 2, TRAN 3 or revise TRAN 1, TRAN 2, TRAN 3 on the portal, you have to also file the hard copy of the uploaded form to your jurisdictional officer. Not only the forms or the revised forms, which can be downloaded after being filed, you have to also file Annexure A. We will go through Annexure A in detail. Annexure A, friends, is a very, very elaborate annexure where you have to disclose various actions which you have taken over the last 4 years or 5 years of availment of transitional credit. So you have to file in hard copy within 1 week of online filing of TRAN 1, TRAN 2, TRAN 3 and Annexure A. All of this along with the hard copy of the purchase invoice, sale invoice and other C form, F form, all other documents, you have to take a photocopy, hard copy and put it in a paper book and file it with before your jurisdictional officer, who will verify the hard copy, and in case he is satisfied, he will pass an order. In case he is dissatisfied or not fully satisfied, he has to give you an opportunity of personal hearing, and only after that, if he is not satisfied, he can reject your claims. As I said, this circular travels beyond the Apex Court orders, and again, there can be a scope for further dispute and litigation in case the field officers do not take a more practical and prudent view. That is, Form C, Form F, Form H, and all other CST related forms, in case they have been issued after 27th of December 2022, which was the last day of filing as well as revising the TRAN 1, TRAN 2, TRAN 3 forms. In case these C form, F form, H form have been issued by the VAT authorities post 27th of December, this circular bars the availment of the VAT credit with respect to the said CST related forms. Now, this certainly travels beyond the Apex Court order, and in case of hardship, it is our legal submission that it would certainly be subject to writ jurisdiction once again, possibly directly under Article 32 of the Constitution of India, where you can apply to the Honorable Apex Court directly. Next, it is submitted and it is clarified by this form that in case there are any errors in filing the transitional forms along with Annexure A, then it would be the last opportunity And once you click the submit button, you can save your data. But once you click the submit button, there would not be any further opportunity of revision. Friends, again, this is going back to square one, and it would be reinventing of the wheel, because again, in case of any clerical errors or small technical errors also, in case the field officers take a strict view as per this circular number 100, then they would, in hindsight, reject this transitional credit. And this would again lead to a litigation. So why this clause has been inserted in the circular is something which has to be considered, and maybe an addendum to this circular shall be issued by the CBIC going forward. Again, another critical point which would lead to litigation and which actually is a hardship is that they have held, as per the circular, that in case a transitional credit has been adjudicated by your field officers, and in case they have rejected your transitional credit, then you have gone into appeals, and in case you are into appeals on 1st of October 2022, then this special dispensation would not be for you. Friends, again, most of our cases are either adjudicated, or in case they have rejected the credit, then it is under appeal. So now, why this special dispensation? You cannot claim the transitional credit. Again, it travels beyond the apex court's order, because the apex court is very clear. In case you are aggrieved due to non-availment of transitional credit, then you can claim this special dispensation benefit. However, this circular 180 restricts that benefit provided by the Honorable Apex Court. And again, in our legal submission, this can once again travel before the Apex Court in case there is no addendum to this circular. Now, there was another dispute regarding the transitional matter before the Apex Court, which held in the case of Philco Trade Center for a bunch of petitions. The dispute was as to why the transitional credit would not be available for those invoices which are more than 1 year old, or why the TRAN to credit would not be available in case the goods are sold after 6 months. Now, on these two matters, the Honorable Apex Court has not held anything in its order, and therefore the field officers, while scrutinizing your transitional credit, would reject these kind of cases where your invoices are more than 1 year old, or in case you are a trader and you have sold the goods on which the TRAN 2 form is filed, but you have sold the goods after 6 months. Now, again, this is a door which is open to litigation, and in case stakes are high, it is our submission that it may again travel to the Apex Court as under Article 32 of the Constitution of India. Now, certain benefits which you can avail of this special dispensation. First, most of the trading companies specifically, and certain manufacturers and service providers also. Service providers and manufacturers few, but especially the traders, in case they are traders in this forum. Most of the traders did not claim the credit of unexpired service tax paid for the entire year of 17-18 expenditure. I will explain by means of an example. You can see on point number 1 on your screen. So for example, you have taken an insurance policy, a general insurance policy for hypothecation for your stock in trade. You have paid the insurance premium. On the insurance premium, the insurance company has charged you service tax, right? Now that service tax is for the full financial year 17-18, and therefore in the month of April, May, June, you cannot take the service tax credit because you are registered under VAT and you are not a manufacturer or service provider. However, friends, 9 months of 17-18 fall under GST regime. And for the proportionate portion of the service tax paid on this insurance premium, to the extent of 9 months, you can claim it as a transitional credit under section 140 subsection 5 of the CGST Act. So this is an opportunity where you can claim this missed out credit or any other missed out credit, if any. For example, we are still contesting in the appellate tribunal of VAT in one of the states where one of our taxpayers had missed out taking transitional credit of a VAT credit. It has not carried forward in the GST regime. Now the VAT authorities have also rejected the claim and we are into appellate tribunal for that matter. The question is, can you claim that missed out VAT credit? Answer is an absolute yes. Friends, the restriction in Circular 180 is for a transitional credit matter which you have appealed for against under the GST regime under section 107 of the CGST Act. But in case of such a credit, in case you are before the tribunal or any other authority in the VAT regime, there is no such restriction even in this circular 180, and therefore you can, even though you are in the appellate tribunal in VAT regime, it is our respectful submission that you can avail of this special dispensation in the GST TRAN matter from 1st of October 2022. Right? Now, how do we prepare? I think most of us have gone through the adjudication cases for transitional credit matters. Most of us have faced the transitional credit of the department. So we should all be ready with our documents. However, in case there are certain documents which are missed out earlier, then we should all from now prepare our documents, underlying documents for this transitional credit, because mind that this is a special dispensation and the field officers would not leave even one invoice. So each and every invoice, each and every CST related C form, F form, H form, all these documents should be kept ready by us. Now, in case many of the taxpayers, even we have advised that in case of missed out transitional credit, to avail the credit through GSTR 3B. In case you have done that, you have claimed the credit through GSTR 3B, the transitional credit, then this is the right opportunity. You can reverse that in your GSTR 3B and claim it under transitional credit special dispensation so as to avoid any disputes with the department. PLA balance cannot be carried forward. The TRAN credit is not available for PLA balance. You have to claim it under the central excise regime itself. Now, in case you have paid CVD or SAD due to debonding or failure to meet the export obligations, many of the taxpayers have faced this. The question is the CVD, SAD, etc., which you have paid, can you claim that as a credit now if in case you have fulfilled your export obligation? Answer is a no. In case you feel that that is unjustified, you have to appeal for in the erstwhile regime itself. So friends, these are the various issues and the various ways by which we should be ready for this new special dispensation from 1st of October 2022. Part Annexure A, which you have to file along with TRAN 1, TRAN 2, TRAN 3 is on your screen. Part A is the KYC. However, again, what is important is this para 4.4, where it says whether you have received a notice or not. That is, in case your transitional credit has been done by the department, then you have to declare that whether you have received a notice under 73, 74 or not. In case you have to disclose whether you have filed an appeal or not, right? Now, again, the question is that whether at all this circular 180, to the extent that it denies the special dispensation relief, to the extent you have gone on an appeal in case of a disputed transitional matter with the adjudicating authorities, whether this is a violation or whether this circular travels beyond the Supreme Court. I have said earlier, this, as per our view, is may be contested in the apex court under Article 32. So then you have to give a declaration in Part B. So friends, this is about the transitional credit special dispensation available from 1st of October to 30th of November 2022. The second matter which we are going to discuss and which is a pain point across is this clause 44 of the tax audit. In case you are practicing direct tax, then you would all be still at pains as to how to deal with this clause 44. There have been various clarifications, the tax audit guidance notes are there, and various other circulars and articles, etc. are there. Let us understand now, since this is the last 4-5 days and now there is no more way to further delay this. Now we have to come to a conclusion regarding clause 44. We have made a reconciliation format for this clause 44, which let us discuss over the next 10 minutes in case this is helpful. We in our firm, for all the clause 44 related matters, are following this reconciliation format. First, let us understand this clause 44. So primarily, what is the intention of clause 44? We all know the government wants to know the gamut of the total expenditure in the country which is made to unregistered parties. Clear? Now, first, serial number 2, as you can, there are only 7 requirements or 7 cells in this clause 44. First is serial number. Second is total amount of expenditure. We will discuss what is the meaning of this total expenditure incurred during the year. Then out of this total expenditure, you have to divide it into two major parts. First part is payment out of total expenditure, payment to registered parties and payment to unregistered parties. Clear? First, payment to registered parties is divided into three parts. Serial number 3, 4, 5. Payment to exempt entities or entities which are supplying goods or services which are exempt from GST. Payment to entities which are under composition scheme and relating to other registered entities. So this is the total of payment to registered entities. And 7, serial number 7, payment to unregistered entities. So total expenditure, serial number 2, equal to 6 plus 7. 2 equal to 6 plus 7, right? 6 is payment to registered out of the total expenditure and 7 is payment to unregistered, right, entities. Now, this is the reconciliation before you. This is a format which we have developed. Now, first question which is asked is whether this expenditure is only related to revenue expenditure or also related to capital expenditure. Friends, in our submission, this expenditure is related to revenue expenditure as well as capital expenditure. So this part we have to keep in mind. So it is not only the P&L account debit balance which you will see, you will also see the fixed asset and work in progress schedule of your company. And from there, you will take the additions of the made to the fixed asset. Total P&L account debit balance plus fixed asset addition or WIP addition, that will amount to your total expenditure. Say it is rupees 100. Now the question is whether those expenditures which are not related to GST, like salary expenditure, which is in Schedule 3, all Schedule 3 expenditure, bond transfers, high seas purchase, third country purchase, depreciation, bad debt, provision of expenditures, foreign exchange loss, all of this have no relation to GST at all. The question is whether your total expenditure in table number 2 will table number 2 include those expenditure which are outside GST. On your screen you can see our respectful submission is that you are not required to disclose those expenditure. You are not required to take into consideration those expenditure which are no GST impact. So out of 100, you can see on your screen, depreciation is rupees 5. Bad debts written off rupees 5. Provision for expenditure 5. Foreign exchange loss 5. Salaries 10. Just a second. Yeah. So salary is 10. High seas purchase 5. Third country purchase 5. Total 40. This 40 out of 100 you don't need to disclose at all. You need to reduce in your reconciliation. Just like a bank reconciliation statement, right? Don't include this. Again, you need to add back certain items. For example, commercial credit notes. What you do in case you are a recipient of the commercial credit notes, your supplier has issued you a commercial credit note without GST. What do? You show it as a reduction from your purchase, right? So your purchase is reduced to that extent in your profit and loss account. The question is, you have to whether you need to disclose that amount of purchase which is related to credit note? Answer is yes. So same analogy we apply for what we have applied for expenditure. So you add back, right? This commercial credit notes. So 5. So total now you will reduce 40, add 5, right? So your serial number 2, that would be 65. So your total gamut, you start with 65 rupees in your clause 44. Now 65 rupees, you have to bifurcate into registered as well as unregistered purchase of goods or services. First question, whether you need to give the details of the expenditure, break it up into head-wise expenditure, printing and stationery, the gift items, purchase of goods, purchase of services. Answer is no. They require only the total, right? So you have to give only the total expenditure, right? So you have to start with 65. You don't have to break it up. Now, out of this 65, we come again now, serial number 3. Goods or services which are exempt. The question is, what is the meaning of exempt? That is defined under section 2, subsection 47 of the CGST Act. Exempt means those which are exempt wider notification. For example, say food grains or certain services rendered to government entities. They include nil rated supplies in your notification number 1, 2017 CGST rate and 11, 2000 CGST rate. Wherever you see nil, even that will be included in exempt. And non-GST supplies like sale of money, sale of securities, like alcohol, diesel, petrol purchase. All of this has to be disclosed under serial number 3, the third table, right? See, it comes to 5. Just a second. Okay. So just a second. I think I have. Okay. So we'll share the slide to you. That slide is missed out. Now let us come to serial number 4, right? We will share the second slide to you. That second slide for this reconciliation, that is somehow missed out here. So serial number 4 related to entities which are under composition scheme. None of the taxpayers as on date, friends, have in their ERP a module whereby they are tracking payment made to composition dealers. However, in case you can track, please, it is our submission that you should disclose payment made to composition dealers. In fact, one way which we are doing is that we are tracking wherever a bill of supply has been issued to us. So in case a composition dealer is there, he will issue you a bill of supply. In case bill of supply has been issued to you, then you disclose that amount and you ask your tax auditor on the basis of your representation to put in a comment in its tax audit report that since this is the first year of implementation of clause 44, the ERP of the taxpayer does not support tracking of payment to composition dealer. It is in the process of being developed and therefore the same cannot be reported in this first year of implementation of clause 44. So I think this should not lead to any roving inquiries because this is just a disclosure. It does not impact either GST or income tax payments. Now next, and very, very important, serial number 5, payment to registered entities. Now this is very, very important. It is our advice that you start, say you are registered in 26 states in India. The question, and this clause 44 is relating to only your company as a whole. So our advice is you start with the GSTR 2A or 2B figure. From the GSTR 2A 2B figure, reduce the stock transfers. Reduce all the stock transfers credit across these 26 or 25, whatever GSTINs you have for the company as all. Reduce them. Reduce the ISD credits, ISD invoices. Reduce them. So you come to the payment to registered entities. Reduce the credits which you have not taken, like blocked credits which are appearing in your GSTR 2A or 2B, right? And then add back ITC which is appearing in your purchase register relating to certain expenditure in your purchase register. It is appearing, but you have not taken it because it is not appearing in GSTR 2B. So 2A 2B figure minus all stock transfer invoices credits minus all ISD invoices credits minus the plus the credits you have not taken and plus the items which are reflecting in your purchase register but not reflecting in your GSTR 2A or 2B. This will give you the total of serial number 5. Now 3, 4, 5, add it and you come to serial number 6. So 65. Now 3, 4, 5 is done. Now the question is serial number 7. That is the most important. How do you come to those expenditure which are made to unregistered entities? One important point over here is reverse charge. Reverse charge payment also you have to, now again the word payment over here which is used, okay, has to be read harmoniously. So here it is given in serial number 6, payment is written. Is it related to only bank payments or cash payments? No. It has to be read harmoniously and all the expenditure has to be given. Over here, that is our legal submission in this case. So reverse charge. So reverse charge, you will bifurcate it into 2 parts. One is reverse charge paid for those entities which are already registered. So for example, you are making a payment for manpower supply to a registered manpower supplier because you are a corporate entity. So you report it under serial number 5. If you are making the payment under reverse charge with respect to the supplies taken from an unregistered entity, for example, you are taking from an unregistered transporter, then you disclose it at serial number 7. Thereafter, you see what is the balance of those 65. We started with 65 over here, right, in serial number 2. Now, the balance of this 65, here you have to go through and you have to see whether all the balance is related to unregistered. In case you have missed out, you can put it in the columns, and balance you have got the papers also with you. You have got the supporting documents also, and balance transaction wise you can keep a record and you can disclose it in serial number 7. So this, gentlemen and ladies, this is the reconciliation We will share this PPT with you. You can go through this at your own pace when you are preparing your UC clause 44, because it is very, very important since it's the first year. Therefore, it will be scrutinized by the revenue authorities going forward, and you should have the supporting documents to, justify whatever figures you disclose. And the biggest mistake which many people make is this serial number 7. People treat it as a balancing figure. Do not do this mistake, friends. Please always maintain transaction-wise details. Many of our professional friends also ask us a question. Is that can we not disclose anything over here in clause 44 and state that since this is the first year, we do not, the taxpayer has not given us the requisite details, and we are dispensing off with this requirement because we don't have details. That in our submission would be suicidal. Please do not do that. Protect your taxpayers, protect yourself. It is our advice to our professional friends. As a taxpayer, those industry people who are here, please do maintain all these documents. This reconciliation, this would be helpful, and each of these items on your screen, you can have separate annexures for each of these items so that you can prepare this, keep it with you so that future inquiries can be dealt with. So friends, this is it about clause 44. Now, next point is 194R. A lot has been said about 194R. Those of you who are practicing income tax or dealing with income tax matters in your companies, they would be aware of the income tax repercussions. In this webinar, we will discuss primarily the impact of TDS under 194R in income tax on GST. So what is 194R? 194R, just to summarize, is a TDS which is required to be deducted by any person, resident, non-resident, when he or she is making a payment to a resident at the rate of 10%. The payment has to be made in course of business or profession, and this 10% would be on the value of two words, benefit or perquisite. So any benefit, perquisite provided by one person to a resident is liable to TDS under 194R at the rate of 10%. But please hold, this benefit can be in kind as well as in cash. They have included the word cash post the finance bill, and it has to be paid before the provision of benefit or perquisite. So let us understand slightly before we go on to the GST implications. Say for example, you have given a scheme for your dealers whereby any dealer who sells, say you are a dealer in cement, you are a cement company, you give a scheme to your dealers that those dealers who sell 1000 bags of cement in 1 month, they will get a gold coin free. This provision of gold coin, say the value of this gold coin is rupees 50,000 rupees, right? So this 50,000 rupees of gold coin would be liable to TDS under 194R, and you as the cement company would have to deduct 10%, that is 5,000 of this 50,000, and pay it to the government of India as TDS under 194R, and your dealer can take the credit of this 5,000 rupees of TDS paid, but your dealer has to disclose this 50,000 rupees of deemed benefit in his income tax return as an income and offer it for taxation. The question is whether you pay, if in case you pay cash to your dealer. Is that a benefit perquisite? It was held by the apex court in the case of Mahindra and Mahindra that cash payment will not be considered as a benefit, but this circular has gone beyond this apex court's decision and held that TDS needs to be deducted on this, and consequently it will be treated as a benefit in the hands of the recipient. Friends, now we will only discuss this one example in this case and understand the GST benefits because of the paucity of time and because of the limitation of time, I would say. Now this gold coin, first question. You can go through the various other items on this once you get this PPT. First question, say you are the cement company. Would you get the input tax credit of this gold coin which you are supplying free? There are various advanced rulings. Even we have the advanced ruling in this month itself by the Karnataka Advanced Ruling Authority. They are of the view that this is a outward supply of goods or services. Some advanced ruling authority says that it is a business asset which has been disposed of without consideration and it would be considered to be as a supply under Schedule 2. Some advanced rulings are saying that it is considered to be as a gift and ITC reversal would be required under Section 17(5)(h). In our legal submission, it cannot be considered to be as an outward supply of goods or services as there is no consideration which is received and it will not fall under Schedule 1. It cannot be considered as a business asset because an asset is that which generates future economic benefits. This expenditure on gold coin would not generate any future economic benefits and therefore it cannot be considered as a business asset. A gift is something which cannot be demanded and is gratuitous, given out of love and affection. This gold coin is not given out of love and affection, neither can it be demanded. And it can be demanded because it is as per a scheme and therefore it cannot be considered as gift and no ITC reversal in under Section 17(5) subsection H can be demanded on this gold coin provision. However, this still is an open issue and in case the Ministry of Finance would listen to this, we have videos on the YouTube, we have represented through trade bodies before the Ministry of Finance in this matter. Then it is our submission and appeal that there should be a clarification, a circular in this matter. It is the need of the hour. Now, the question is whether a discount under GST that would be considered to be as a benefit or perquisite or not. The Ministry of Finance, CBDT, has held in circular number 12 dated 16th of June 2022 that trade discounts, cash discounts and rebates would not be covered under 194R, would not be liable to TDS. However, friends, they have given a caveat that this is only related to 194R, but it can be considered as a benefit perquisite and would be liable on the recipient of this credit note in case it is a post-sale discount. It can be liable to GST. Now, it is a little complicated. Please try to understand it little by little. Say, for example, you, again, we'll come to that same example. You are a cement company. You give a scheme whereby in case any dealer purchases 1,000 cement bags, within 1 month, he would be given a 1% turnover discount. After 1 month, you give him a 1% turnover discount on all the sales made to him within 1 month, and that comes to say 1 lakh of rupees. You give it by the means of a post-sale discount credit note under Section 35 and read with section 34 read with section 15 subsection 3 clause B of the CGST Act. The question is that this credit note, this post-sale discount as per the CBDT, and many field officers are taking the view in income tax that this credit note value of 1 lakh rupees, that would be a benefit, and as a recipient, your dealer, as a recipient of the credit note, your dealer has to show it as a income in its income tax return. The question is, will that income disclosed under income tax return by your dealer, who is the recipient of the credit note for post-sale discount, will that be considered as a supply? You would say, as a GST professional, your view would be, how can this be? It is a pure discount. Friends, let me tell you, across the country, this is a huge matter of litigation, and the field officers, certain field officers, right? And we are contesting this already. And we have also appealed to the CBIC to provide a clarification. Certain field officers are taking the view that this discount is due to certain services provided by the dealer to the cement company in our example. And now when the income tax CBDT considered it as a benefit, then the quid pro quo would be further strengthened, and this would be a huge matter of litigation under GST going forward in case we do not get a clarification from CBDT. Buy one, get one free samples, same issue. GST would sought to be levied because this would be under, you see, 194R and 28(4) under income tax. Right? Now again, waiver of loan. This is again the CBDT has clarified that in case you waive off the loan or write off certain bad debt, it can be considered to be as a benefit and subject to TDS under 194R. Question is, the person who has got this loan waived, should he disclose it as an income? Answer is yes. However, in our view, in case of GST, this should be a unilateral consideration and should not be considered to be as a supply. In case of reimbursement of expenditure, right, they have clarified under Circular 18 that in case of reimbursement of expenditure which is not as a pure agent, where GST is charged, TDS under 194R would also be charged. So pure agent and 194R, for the purpose of reimbursement, they have linked together. So pure agent and 194R, or even 194C and 194J for that matter, they are now all interlinked. In case you are deducting TDS in income tax under 194J, R or C, in the matter of reimbursement, mind that GST would also be applicable. It would be rejected as a pure agent. Friends, now I am doing interplay, mind that. So I am now reversing. Say in case I am the service provider, say I am a consultant, right? I go for a hearing and I incur certain expenditure on flight charges, which I charge to my client. And in case the client deducts TDS on this reimbursement, gentlemen, the GST authorities would pounce on me and say that since your client has deducted TDS, it would not be considered to be as a pure agent and liable to GST. Be very, very careful, friends. This 194R, I am telling you, this is going to have a huge impact, right? And interplay needs to be done suitably in this case. Again, various other contentious issues are there. 194R, bonus issue, right issue. They have said in case of private company, even bonus issue and right issue, that would be considered to be as a benefit or perquisite. So all of these clarifications by the CBDT White Circular 1218, please go through this and The impact of GST, I would also appeal by this video and to the trade bodies, the chambers of commerce. We should all apply to the CBIC to come out with suitable clarifications of the impact of 194R in the matter of GST. Otherwise, it could go, lead to a Pandora's box, not only in income tax, but also in GST. Well, last date for issue of for availment of ITC, last date for issue of credit notes, last day of amendment of invoices on the GST portal relating to financial year 21-22, while it has been enacted by the Finance Act 2022, yet the Finance Act 2022 clauses 100, 101, 2, 3, 4, 5, they have not been notified, and the time barring period for availment of ITC for 21-22, issuance of credit note, rectifications of invoices with relation to 21-22 financial year, that still remains 30th of September 2022 return filing period. So by 20th of October 2022, we must all claim our ITC and issue the credit notes and file for all rectifications, right? In case there is no further notification by the CBIC or the state government authorities, we all know that by Finance Act 2022, the time barring period in all these cases was extended to 30th of November 2022 and subsequent years accordingly. Okay, so customs and DGFT, certain important amendments are there. We will discuss those and certain other amendments and certain other circulars related to summons, prosecution, etc. in GST. Before we take your questions, I see a lot of questions have already come on the chat box. Now, yesterday, there was a circular in Customs, Circular 20 of 2022, whereby they have clarified that in case trucks which are in the nature of cranes. So on the truck, there is a crane for lifting of vehicles, goods, etc., which you see in the EPC, the sites, the construction sites, right? Whereby there is a truck, whereby there is a motor vehicle, and on that a crane is fitted for lifting of the vehicle. The query was a long-standing dispute whether it would be disclosed as overhead traveling cranes or motor vehicles under 8705 or 8426. This analogy can also be used in case of air conditioners which are fitted on top of the vehicles. They have clarified that the most important point to be seen in this case is whether the crane which is fitted on top of this truck or motor vehicle, whether it is an integrated part of the motor vehicle or not. In case this crane is fitted separately on the motor vehicle, then it would be considered under 8705. Otherwise, it would be considered under 8426. Very, very important circular, not only for these goods, but all those goods which are fitted by one with one another, right? This analogy would apply, and certain Supreme Court judgments are given. You can go through this. This is an important circular for classification matter. End use in the case of Crompton Greaves. Now, again, important judgment in the matter of customs classification. Certain printed circuit board, right? So there is a printed circuit board which is used for the manufacture of LED lamps. The question was whether it would be treated as a circuit board or whether it would be considered to be as a part of lamps and lighting fittings. The answer was it is a more specific printed circuit board. Just because the end use of a product is to manufacture LED lamps, it cannot be classified as a part or fitting of a LED lamp. Same analogy can be applied to many other cases. So this is an important judgment, the matter of Crompton Greaves, which would help the electricals companies and several other companies. Relaxations for usage of electronic credit scripts like Rostel, ROTEP scripts, which was limited to 1 year for availing the payment of duties with respect to the duty credit scripts utilization or with respect to transfer of the utility duty credit scripts. Now that period of 1 year for limitation that has been extended to 2 years by notification 79/2022. So in your electronic credit ledger under custom section 51B, if there is a credit script that can be now utilized for 2 years instead of 1 year, and it can also be transferred within 2 years and not 1 year. Important benefit again. Amendment to the import of goods on concessional rate, right? So there is an amendment whereby the bond and bank guarantee for concessional rate that has been limited to 25% of the bond debit value. Time period for utilization of the goods which are imported at concessional rate under specific notification that can be done within 6 months plus 3 months on the approval of the commissioner. And the job work, while if you are importing the goods at a concessional rate, you cannot give it to a job worker, but the person who is purchasing the goods at concessional rate to you, it has been clarified that that person can send it to a job worker. There is no bar on that person sending it to a job worker. Certain important instructions by the GST investigation wing. You can go through our videos on the viewed YouTube. We have discussed this in details. The instructions on summons and instruction on prosecution under GST. We all know, gentlemen and ladies, that now over the last 5 years, especially the last 2 years or 3 years, under GST, where a matter could be taken care of by merely a hearing in the department, the summon route was taken. Well, summon are proceedings under the Indian Penal Code 193 and 228, and in case you are summoned, then you cannot leave those premises until and unless the court orders you or the summoning officer orders you. And in case it is seen that you are hiding certain information, immediately you can be arrested. So summons have to be used very, very judiciously, but they were used left, right, and center. The three main grievances of industry was that for everything which can be done by means of a hearing, simple hearing, a summon was issued. Now that has been clarified that summon cannot be issued by the drop of a hat. If a normal 3B, 2A, 1, 3B mismatch matter has to be investigated, it has to be done by means of a hearing and not by means of a summon. Another hardship which industry was facing was that certain directors, top officials, CEOs, managing directors of companies were summoned on the first instance itself. Independent directors were being summoned. We have handled this in Maharashtra, where independent director was being summoned. What is independent director? What has managing director got to do with GST? He is not handling GST day to day. So it has been clarified that these directors who are not related to GST management, they should not be summoned. Tax heads, accountants who are handling GST matters, they should be summoned so that the rightful conclusion to a case can be reached. And summon cannot be for summoning the returns, summoning the invoices, etc. Matters, the documents which are already uploaded on the portal. They have to be for documents which are not uploaded on the portal, not uploaded on the public domains. Very important, and which sets right the understanding and intention of the CBIC is that they have specifically stated that in case there is not strict compliance by the field officers of this instruction, then very serious view would be taken of those officers who are not strictly complying with these instructions. Right. Again, many a times when we went for summons, we saw that the summoning officer himself was absent or he had gone to some other hearing. Now it is mandated that the summoning officer should be present on the date of the summon. If he has to go out, he has to pre-inform the taxpayer who has been summoned. A very, very important clarification in this is that the summon cannot be done only by the superintendent. They have to be ratified not only by the ACDC in writing, but even by the commissioner. Senior officials have to be informed and involved, and just they cannot leave it to the last superintendent, last officer in the whole hierarchy. So this is a very, very important judgment, instruction. And now the senior officials of the department and the formations, they have to take responsibility of the summons which have gone out of their commissionerates. Similarly, there is a circular on prosecution. Now, while this circular clarifies and relaxes certain things, yet it provides certain clarifications which should be noted by all of us sitting over here. Either we are working as professionals in a company or we are practicing. We all know that prosecution can be launched under section 132. There are 4 clauses A, B, C, D, whereby prosecution will be bailable, non-bailable and cognizable. Then there are certain other matters under 132, over 5 crores, after 2 crores to 5 crores, etc. There are various slabs. Certain important things is that prosecution cannot be launched on merely where there is a suspicion. And mens rea has to be proved for launching prosecution. Just because a supplier has defaulted in the GST payment, a prosecution cannot be launched on the beneficiary of the goods until and unless it can be proved that there is mens rea on the part of the ultimate beneficiary. That is the ultimate beneficiary. It cannot be proved that if he is the mastermind of the transaction, a prosecution cannot be launched on the ultimate beneficiary, right? However, all officers involved in a company or in an organization, like manager, secretary, or any other officer, even tax head, prosecution can be launched against them. It is not only the directors now. So friends, all of us who are officers of the company, we need to be aware of our roles and our responsibilities in the companies, because it is now clarified by the instruction number 3 of 2022 by the GST investigation wing that prosecution can be launched even against an officer, tax head, CFO of the company. So we have to be careful of our roles and responsibilities. One very, very important High Court judgment of the Allahabad High Court, while it was in the favor of the taxpayer, the matter was in case there was no inward e-way bill, can the refund be rejected on allegation of clandestine receipts? So in case you do not have an inward way bill for an ITC which you have claimed, the question was whether the refund can be rejected. While this was in the favor of the taxpayer, however, a very, very serious question has been raised. And now, even the ITC which you are claiming, wide your 2B, that can be questioned by the field officers in case you do not have a e-way bill for the ITC which you are claiming. Friends, please go through this judgment by the Allahabad High Court, right? Reported by VILGST in 645-ALH in the matter of Bushra Export House, 2-star Lucknow. This is a very, very important judgment, friends. And this is a very, very important issue which the Uttar Pradesh GST authorities have started investigating. While this went in the favor of the taxpayer because he could prove that there was no requirement of e-way bill itself, but it brings to the fore a very, very important matter going forward. So friends, this was it. There are other small issues which you can go through at your own pace, right? This was it from our part, right? The various issues under GST, customs, DGFT, which we wanted to discuss in this colloquium. We will share this PPT with you, and we would take the various questions now which are there in the chat box. Yeah. So Miss Lakshmi says Form C, H and F. Okay, I suppose it is to be read as 25th December 2021. Oh yes, there was a slight error. Actually, it has to be read as 27th December 2017, which was the last day of availment of the filing the transitional credit form. So 27 December 2022 in my PPT has to be read as 27 December 2017 for C, F and H form issuance and availment in transitional credit via this special dispensation. Mr. Prakash says we have not filed TRAN 1 earlier, however applied for refund and our refund application rejected by the department. Rejection order passed. We have not filed appeal in the SESTAT. Mr. Prakash, you see, it is a very important question. You have not appealed to the SESTAT. Even if you had appealed, that was under the erstwhile regime. This special dispensation, even circular 180, debars those applications where an appeal has been filed under the GST regime. Your matter, the rejection is not under the GST regime. So even under this circular 180, the transitional credit via this special dispensation would be eligible to you. That is our take on this matter. You can go ahead and file TRAN 1 via this special dispensation. Mr. Sambamurthy says, can we amend table number 17 now with respect to HSN and file TRAN 2 using this window? TRAN 2 was not filed earlier. Yes, of course, you can do that, Mr. Sambamurthy. Mr. Vikash Mittal says, my claim of VAT ITC for the period 12-13 to 16-17 was it litigation due to which I was not able to show the same in my VAT returns. In 2021, appellate order passed upholding my entitlement for ITC. Can I claim such ITC in TRAN 1 now, even though it was not reflected in any VAT return in preceding years? Mr. Mittal, I think just due, on the basis of the order, why this special dispensation? The field officers who is scrutinizing your TRAN credit may not grant you the transitional credit. However, you may go up to a high court and get it done. But to avoid litigation, it is our submission in this case that with the order, you should go to your VAT authority and try to get your VAT return, your last VAT return rectified manually. And on the basis of the manual rectification order, then you go through this special dispensation, and then I think your matter would be foolproof and may be dispensed of by the GST authorities, the field officers. Otherwise, they may question the claim of transitional credit just on the basis of an order of the under VAT, and why which is not flowing directly from the VAT return. But a good case, I think you should take the special dispensation from 1st of October in your case. Miss Lakshmi, yeah, I have clarified your doubt. Okay, Ms. Siadu. We are DT unit and supplying goods to SEZ and going for a refund under Rule 89. As per the board's instruction number 3, GST department is verifying that said supplies in the online SEZ common portal. If not captured our supplies in SEZ online portal, the department started rejecting the GST refund amount. We understood says customer that they have incorrectly mentioned our GST and number as typographical error, due to which there is no GST and validation in the online portal. Due to the procedural issue, customers and how the substantiate benefit is denying any case law. Yes, of course, the benefit cannot be denied. There are various case laws. You can write to us separately and we can, provide you with the case laws. The benefit, just because your customer has not updated the GST-IN on the SEZ portal, your benefit cannot be denied. First of all, you should take a declaration from your customer, take a CA certificate and submit it to the GST authorities, right? And appeal to the GST authorities to grant you the credit. Otherwise, I think High Court would be the route to be taken in this matter, and it is a righteous claim of of refund, and it cannot be denied in our respectful submission. SAPL Industries, TRAN 1 filed manually, now we can file and GST audit done, not comment TRAN 1 in notice. You have to redraft your question. I mean, it's not clear. Mr. Shubham says material vehicle reached our company gate, but the e-way bill goes expired on that time. See, as long as e-way bill is generated till that time, I think the ITC cannot be denied, even if it is expired, because it is a procedural lapse. However, if e-way, so they cannot question the receipt of the goods itself, right? However, if e-way bill is not generated, they can question the receipt of the goods itself. What can we do at this time? Just file a letter with the authorities. Ms. Lakshmi says relevance of extension of 30th November when ITC cannot be claimed beyond 20th of October. Well, it is for this year. Once it is notified, then you can claim the ITC from the next year till from 30th November. Ms. Shraddha says we have filed refund under ISD. Okay. The accumulation of credit took place as a product sold by us. The price is reduced by the subsidy given by the government. However, we purchase the product at the same rate without any subsidy. Okay. This has led to accumulation of credit and department refused to provide refund under ISD, as they claim ISD is only on account of rate and not value. ISD, how can you claim a refund from your ISD registration? Oh, IDS, it is inverted duty structure. Okay. Inverted duty structure, yeah, it has been clarified, but you can also go through the recent circular where it is said that you see, due to the rate difference on a point of time. Well, you can see the recent circular. I think, very recently in the last 2 months, there is a circular in this regard. You can go through that. This query on rate difference and claiming of inverted duty structure, that needs to be further, looked into as per your specific case. Okay, SAPL Industry says, sir, GST audit completed by the department auditors, but TRAN 1 not mentioned in the notice. So no problem. You can always claim the transitional credit if there is no notice at all. TRAN 1 filed manually, now we can file because already audit done by department. If department has allowed, you have got the credit, then what is the use? Don't do anything. But if department has not allowed you the credit, or if you do not have you can file a letter to the department and you can ask them specifically if they have any issues in this regard, And in case they have any issues, then it is better to go for this special dispensation. Otherwise, it may result to a double availment of ITC. Mr. Samba Murthy says, can we take up amendments in table 7 of TRAN 1? Some places TRAN audit is completed, but no formal closure letters. Your view on the same in light of TRAN circular, please. Yes, Mr. Samba Murthy, you can go for this special dispensation from 1st of October if there is no notice from the department or no order in this regard from the department. Mr. Rohit says, please explain implications of suo motu judgment on delay. If date of passing of disputed order by the proper officer is 10/9 but appeal filed on 10/6, can appeal be admitted? You can take shelter under, you can just see the timelines. However, this period from 1st March 2020 to 28th of February 2022, that has been excluded while computing the period of limitation. So if excluding that period, as per the notification, if that the appeal is not time barred, then you can always file the appeal taking shelter of that notification by the or notification or circular by the CBIC. Right. So I think that is it. Thank you very much for attending this webinar on your on busy Saturday of September and ensuing October. And happy taking of ITC, happy rectification of credit note, TRAN credit going forward. Thank you very much. See you next month. Thank you.
Thank you, Vivek sir, for this wonderful deliberation. Thank you all the participants for attending the webinar. We conduct such webinar every month, and we hope we will get you into upcoming webinar as well. We will shortly share PPT and video link to all the participants. Thank you.